As we've mentioned, Wall Street ended last week on a note of uncertainty, with the major averages all falling more than 2% on Friday. The Nasdaq, in fact, was down by almost 4%, and all of that came after the September jobs report, which spooked investors into thinking the Fed will stay aggressive on interest rates. Steve Leisman joins us right now with an important new survey on the economic outlook. And Steve, good morning.
Good morning, Becky. Yeah, not a good one here. Economists at the National Association for Business Economics raising their outlook for recession and inflation while lowering their forecast for job and economic growth and corporate profits as well. Here's the Nabe economic downgrade here, just looking for 0.1% growth in GDP for this year. That's down from a 1.8 number in May and just 1.1 in 2023. CPI up to 8% this year. It falls down, but it remains above target 3.8 for 2023. And payrolls go from a very strong average of 353. That's estimated. It's actually a bit higher now. To just 94,000, under 100,000, so maybe even a little bit below trend. Next year, survey respondents sharply raising their forecast for recession this year. Next, put the odds of a soft landing just 50-50. Curiously, the average forecast for the Fed this year and next is just below 390, and that's below the markets and the Fed's own estimate, so not sure what's going on there. But they did say 55% saying the biggest risk to the economy is too much monetary tightening, which is the new concern that's out there in markets. Just 15% pegging the European energy crisis and 10% saying ongoing supply chain issues. 88% say their risk to the forecast is to the downside, so as negative as they were, they think it could possibly be more negative than that. We're going to talk about this, the economic outlook, the Fed outlook later this morning with Chicago Fed President Charles Evans. That comes up at 10:45 on Squawk on the Street. Becky?
All right, so let's go back to that chart you just showed us, the top reasons they think for a recession, that they're worried about a recession.
Yeah.
Number one is too much tightening. The other two, I forget, but inflation was nowhere on that list?
No, that, I'm going to double check that, but it certainly was not high enough to rank in the top there, Becky. That's a good point. It wasn't there at all.
So they don't think inflation is the problem that the Fed thinks it is.
That's a good point as well, Becky. They seem to be a little bit less concerned about that because, look, Becky, there's a lot of folks out there who say the Fed has been very aggressive and some sort of pause here makes sense. Maybe not quite at this level, but maybe at the level they get to at the end of the year. I don't know that I'm hearing a whole lot of support from that on the committee. Bostic liked the idea of pausing at 4 to 4.5%. But a lot of people are a lot higher than that. So the idea that the Fed is going to keep raising next year seems to be fairly well ingrained in support. There you go. There's the Fed rate outlook. That's what the market is forecasting, that 466, kind of on the high side, actually, for the peak funds rate, and then coming down to 440. So some expectation of a course reversal or fine-tuning or tweaking out there.